Hi, so today we're going to be talking about low down payment jumbo mortgages, and there are great new options out there starting at only 5% down. So we'll go ahead and get into that. A couple of reasons why you'd want to do low down payment jumbo. Most of these are pretty self explanatory. A couple of them that I want to touch on. Number two is a big one, I think. Say you're purchasing a $2 million home. If you're using 20% down, that's $400,000. At 5%, that's $100,000. At least $300,000 that you could use to fix up that home, personalize it, make it what you want. A lot of times, if you're using it smartly, you can uh, fix up the kitchen, bathrooms. You can add a lot of value to the home. Still have as much equity as you would have otherwise, but then it's going to be exactly the way you wanted it. Uh, Number four, I think is a good one too. You can use the funds for other investments, so that couple 100,000 can be, in the bank, earning interest. It could be in stocks. It could be in an investment property. All things making you money instead of sitting inside of your home. Um, your home's going to appreciate the same rate, whether or not you put down 5% or 95%. I think the rest are pretty self-explanatory, so I'll go ahead and move on. Basic requirements: 5% down jumbo is the minimum, and unless you have a VA entitlement, that's a whole different deal. Um, that one requires a 740 middle FICO score, so pretty high FICO requirement on that. No gift payment or no gifts are allowed with only 5% down. You can go up to a $2 million loan amount, which gives you about a $2.1 million purchase price with the 5% down. You're going to need 9 months reserves on that. If you go up to 10% down, it's a lot more flexible on credit score, loan amount, what you can use gifts for. That one's great because you can use 100% gifts for all the down payment, reserves, closing costs, everything. So first time home buyer that's buying a jumbo, which we see out here in California fairly often, um, would be able to use this. And 9 months reserves are usually required for that. One neat thing about the 10% down is you can take all of that can be gifts, so you can wire all that, the whole thing into escrow, and then after closing, all those reserves will come right back to you. So pretty neat feature of that loan. So what about credit? 5% down jumbo. Again, it's going to be a little bit stricter than 10. You're going to need 4 years after a short sale, foreclosure, or bankruptcy. Most people that went through that are, but some people are not right now. That's going to require 740 mid FICO score. So if you did have one of those, you're probably going to have pretty clean credit otherwise. 10% down jumbo, 2 years after short sale, foreclosure, or bankruptcy would be the minimum, and a 660 mid FICO score would be required on that. And that's not all of the credit requirements, but that's the basics. The 10% down is going to have a lot more flexibility than 5. And what do I mean by reserve? So that's what that is just showing that you have extra funds available after closing. You can use retirement, stocks, checking, savings. That's calculated by the number of months that are required by the program times the full payment. So you're going to keep those funds. You don't have to give them to anyone. All you have to do is show the statement, and you're good to go. And what about debt to income ratio requirements on this? Quite simply, that is just your monthly debts divided by your monthly gross income. So if you make $20,000 a month and you have $10,000 a month in expenses, that's a 50% debt to income ratio. So the 5% down requires a 43% or less debt to income ratio, and 10%. We can go as high as 55% with exceptions. Most time it's 50, but we can go up to 55 sometimes. And what if you want more info, you can give us a call, 925-322-0436. Speak with an advisor. Just be a no pressure consultation. Or you can go to the 5downjumbo.com. That's going to have a little bit more info on there. There's also links to get a quick quote on it if you're just curious about what kind of rates there are. You can do that. And otherwise, we hope to hear from you soon.